Hello, boys and girls. I hope the sound is good. I just realized I've been sitting on like half sound for the past hours. I hope my Discord members there don't hate me for that, and my students don't hate me for that either. No, what's doing? Is it no? Why is it playing it again? No, stop it! Stop it! Thank you. Alrighty, cool. So also sorry for being late. Lots of stuff today. Was really busy with meetings, hangouts, and stuff and things, and finally made it to the hangout to the live here. Hello everybody, Casey, Nannies, Blackberry. I saw you join the Discord. You need to follow the instructions on the FAQ channel. You need, sir, need to you sir need to go here. Let me show you and follow the instructions here. You need to connect your accounts. Click this, connect your accounts. Make sure you're using the same email. Here you are. No, that's Black Mamba. Blackberry, you actually probably made it already in. Guys, those who are sitting on the sidelines, you need to connect your accounts right here. It's important. Otherwise, you'll be stuck in limbo forever. Do that. It's very important. FAQ channel. Okay? Okay. Follow the instructions. Now, let's see. Yeah, no, Walter. Hello, Walter. By the way, hello, Walter. Almost forgot, didn't notice there. And let's go over this. Some of you may hate me a little bit for what I'm about to say right now. It's sort of a nothing burger day. I mean, we are definitely seeing the descending channel right here, sort of the descending behavior here, right? Not surprisingly so, we're kind of stuck within that very channel. We can see lots of noise, lots of instability. The market is just having gaps left and right, which is horrible because today we actually had a horrible gap throughout the day, right? We had this thing, which kind of sucks. And if you think about it, it really sucks extra because that wasn't really the market open gap. The market opened up here, right? You can see 6th, 7th, right? And then throughout the trading, we had this thing, which is suspicious. It's actually very difficult to create such a discrepancy as we go. And in fact, it's normally due to a very fast paced position that's being executed, I would argue, by an institution or somebody big, like really big. And I hate how it sits right next to 6100. That means we still might have a bit of a chance to see the price action play all the way back to just have it closed. So that kind of sucks, but we're going to see what the price action dictates, whether this is what we're going to see the price action do within the following sessions. Of course, today's session locks in today's week. So we're going to maybe have a little bit of a look-see into next week and what we are potentially, where we're headed to. Currently, I would argue that based upon the 1 minute and how it's structured, since we know the 1 minute wide channel, the slower moving channel, the bigger channel, if you will, is similar to the fast moving on the 5 minutes, pretty much identical. Now, they're more often than not, and when it does have a discrepancy, it's temporary. So it's far more likely that what we're seeing here is more of an upside sort of thing, trying to match that high. Maybe test some of these line support resistance levels that we have right there at 6,040, 6,042. Not too strong. So again, although strong enough, right? As you can see, strong enough, definitely. And I'm not going to go back and show off. But honestly, the way this is progressing, it might as well just end up being stuck to this channel all the way through, all the way to here. So we kind of have two scenarios. None of them really end well for the S&P as it seems. Basically, doesn't matter whether we move through this range, right, and then end up breaking, or maybe even slightly, we will see how this plays out, or breaking sooner than later and then starting to break one way or another, again, whether it's back to the channel and then breaking. So you see one scenario or another is both end up negatively, at least from the standpoint of where we sit right now. Let's see if that is truly the case. 5 minutes. Let's see, 5 minutes. On 5 minutes, it becomes a little bit more evident that we are on a downslope, right? You see the first three that I was showing you earlier were inside there. Now we're looking outside, and guess what? Again, look at this beautiful thing, right? Becomes pretty evident we're moving downwards, and more so currently within the current fast-paced moving channel. Well, it's time for us to know whether things are going to go one way or another. We're getting closer to the bottom of the channel, so we'll be able to see whether we're breaking downwards out of this longer, sort of slower, longer duration one, and breaking out. Some of you may be asking, well, Greg, why these abnormalities, these anomalies? They're actually not anomalies. They belong to a whole different channel that we've already been through. And as you can tell, we are consistently moving to the left. And so guess what? This time around, it's not going to be any different. We will move to the left eventually, and we will to the very next channel. The question is whether we start the channel to the downside with this downwards looking slope, or we proceed with an upwards looking trend, even though breaking down into it. 30 minutes. Actually, maybe I kind of skipped the 5 minutes momentum, but then again, what are we seeing here? The first 30 minutes of the actual market, when it will open in pre-market or actually overnight, might be still pushing upwards. That's kind of what all it says for you at this moment. So 30 minutes is pretty much insignificant. No, 5 minutes, sorry. 30 minutes is becoming a little bit more significant, in fact, because it does allow us to kind of peek into next week a little bit. Based upon this, I would argue, since we're already testing the downwards oversold area quite significantly and for some time now, and I'm probably going to argue we might have, although this probably is the last of it. This is potentially the beginning of the correction to the upside. So this appears to show that the market will close that gap. We're kind of in advance here, can see if this price, if this momentum can, now that overturning, can be retained to the upside. If you look up close and personal, you see oversold but becoming bullish. So we'll start tugging upwards. This time around, this might be actually the exit back to upwards momentum. Upwards momentum, as this remains dominant, basically the bullish momentum remains dominant. Weekly is going to drag towards the 50. At 50, we will know whether we're going to proceed when it's going to become an actual bullish trend, or it's more of a corrective behavior, temporary. I would argue corrective temporary behavior, and this actually does signify that we potentially easily close back to 6100, closing that gap that we opened up today on this session. In other words, it does appear to be that next week we close this gap no problem. Sorry for my squeaking arm here there. I need to fix it, definitely, or at least oil it a little bit and give it some WD so it's gonna be happy. This is oversold and moving towards switching over, so bullish momentum. So again, confirmation to the upside. So 45 minutes, in essence, giving us confirmation that it's far more likely than not, given the fact of the matter that we're testing median here. And well, we don't really see the slowdown yet, but I'm assuming we're going to see it more so next week. And it's not going to be all that surprising if we're going to see this sort of behavior next week. That's the 30 minutes. So basically, so far, 45, sorry. So far from 1 minute to 45, we're seeing far more confirmation for upside movement, closing the gap. Nothing all that significant, given how insignificant in the grand scheme of things this price action is. Again, people like to say, oh, it's so crazy, and well, it is interesting how we're actually moving into oversold territory right here on the hourly. We're gonna disprove or confirm at 4 hours and see what that means. Hello there, Michalis. Hello, welcome. So we'll see. We will see whether the 4 hours confirms that this is going to become a lot more bearish, because this, in essence, what this says, even if we have enough time, because remember, all these time frames fall within that 1 hour. These 45 minutes are not external 45 minutes. They're the 45 minutes part of that upcoming hour, in essence. And so this, I would argue, actually shows that this might not necessarily happen right away, and we might continue dragging even further lower with some corrective movements and maybe some slippages back and forth as we go. What do we get from the 4 hours? Let's see whether it confirms or disproves altogether our thesis. This is not too healthy for the market. This is not so healthy for the S&P. This, in fact, confirms what we saw on the 1 hourly, so it's a lot more bearish. Irregardless of how we will end up behaving afterwards, flipping over later, yes or no. This divergence, the significance of the divergence, is a clear sign of amplified momentum remaining diverged, at least until it has enough momentum to converge back in. So that actually shows us a potential retest of 6,000, right? If we're going to retain, we will retain this downwards pressure. We will be able to see the 6,000 area, okay? Maybe even more so. I'd argue that if we see this on the 4 hours and this will break below the 50 range on the stochastic RSI, we will actually see the price action break below the 6,000. So 4 hours, in fact, implies that we're going to see a lot more bearish momentum than bullish. Yes, there is some bullish momentum in the framework, sure, in the barrel, but it might be mitigated by the weight of all the negative pressure. Yeah? Makes sense? We understand the gist of things here? This, well, daily is actually already below the 50, so that's kind of a bearish sign for us that the market is becoming slowly but surely more bearish. Within the context of the framework that we have here, I would say that we've tested bottom. We might retest it, the top, the bottom, to test that median basically, and we might retest it again. But based upon this looks like we're far more likely to progress to the downside, although again negative, but confusing because we did see that we have some bullish momentum, so it has to print somehow. The real question is, whatever we'll have on the smaller time frames, is it strong enough to change the direction of this? Between us, boys and girls, I don't think it is. Experience, if you will. Because there is no actual valid way to use this tool to identify whether it's going to fall one way or another, other than to connect the stories of the smaller time frames and the larger time frames and how they create a singular narrative. That should make sense, I hope. But since we are here, and it does appear to be that we're testing median, there was some bullish pressure, I'm going to say the following. I'm going to say I'm not going to be all that surprised if this will push the market higher again, retesting 6,100, and only then reinitiating that breakdown, basically having some convergence, divergence play here, and only then continuing the movement downwards. That can happen. Weekly, since we're about to lock in this week was mixed week. We didn't have anything substantial, anything conclusive about this week. It doesn't appear to be more bearish, more bullish, so it's bullish. It is bullish. We don't get anything substantial. Bullish price action. So, as the, samurai trader would say, so this really not that great. It's not bullish because it was not able to penetrate the 50, clearly breaking right below it. So it is a corrective movement and not an actual bullish wave, if you will. It's more so a corrective movement, as we said, on the downwards pressure. And as strong as it may appear on the price action itself, allowing the price action to push back to 6,100. From here on out, it appears to be that if this will continue the breakdown that we saw with the daily time frame and the 4-hourly time frame, after all the small time frames play their role and do their thing, once they do overturn bearish and play along nicely with the 4-hour and daily, this will amplify the effect, subsequently giving way back to, give or take, 58.38. It doesn't mean it's going to happen on Monday. It might happen throughout the week, towards the end of the week. It might get canceled out. It might get prolonged that we first test the 6100 and only then break down. By then, the low will be 69 something, right? So there are a couple of scenarios here. But all of them, as we said, result with a more bearish price action and outcome. And remember, that also neatly plays into the role of that wedge that we spoke about multiple times on the weekly chart. It will be strong enough. And again, remember how we've been saying that we should be seeing a deterioration of the price action right on this level on top. It becomes very, very evident. I hate to say it, but I'm going to say the bad words, right? That is derived from the very same channel that we got far prior to actually having COVID happen. And so COVID high rather, in terms of, again, the charts and price action. Subsequently, weirdly enough, we're seeing very similar behavior here, although here it was far more rapid because we had all the reasons to. But here people are still confused and buying the dip, thinking we don't have the reasons, not realizing things are actually getting bad. And even if just on the technical side of things, as you see, we're becoming more bearish. As you can see, we're not just retesting another retest inside of the overbought territory, but really we are breaking significantly. Remember the market apocalypse video, I told you this is going to come, and I told you it's going to come soon. It might even get prolonged, but at the end of the day, it's inescapable. And here it is, it's starting to show. What else? Here we said we're going to see convergence once the price action of the 1 monthly will play out, and then as we're going to get closer to locking this within about 2 months, pretty much, we'll be able to know clearly, better, and more objectively what is the quarterly chart implying. Although I would argue that notice how very interestingly we had very strong momentum climbing up and how the momentum is slowing down in these last 3 quarters. Okay, so we're basically coming to a cusp of strong resistance, I would argue. In fact, if we look at these 2 very candlesticks and zoom in on them, I would argue they look a little bit suspicious with all that slowdown and behavior towards this very strong resistance that resides at 6100. Actually, the strong resistance was the 6,000. The 6,100 is just the slippage area. It's just on this scale of things, yes, the slippage is a little bit more the marginal error, the slippage, all of these forces, if you will, end up showing these sort of behaviors. As unpleasant as it is to admit, to some of you that don't see this the same way, this is still scalpel accurate. Scalpel accurate, I would say. What else? Again, we don't have any point in going to the 6 months and 12 months. We know these are so far away from readjusting based upon the price action that is about to come in the medium time frame. So for now, we just focus on the medium time frames, see how they play out, and once they do print their price action, we will see how that behavior moving from this sort of candlestick to this sort of candlestick, or maybe even a negative candlestick, will make a lot more sense. But that's for now. So be patient, boys and girls. For today, I don't think we're going to see anything too substantial. Like I said, for today, we're probably going to trace back to the 6,040, 6,042, the way it appears to be. So I'm not going to be surprised. Oh, that's it. We're done. We're done. Oh my God, I got carried away. We're done. What today? No reason no today. Although, that's probably where today will continue, because we still have a little bit more. No? That's it. We're locked. We're done. That's it. We're done. I got carried away so much. Yeah. We were fully locked, no. But yeah, there is still some price action here, you see. There's still some going on. We might end up going back to that 6,040. That's the little bit that we saw on the smaller time frames. But yeah, that's pretty much it. I mean, from here on out, next week is going to, even if print in the beginning of the week, maybe Monday, Tuesday, maybe might print some positivity, but then as we continue rolling throughout the week, it's going to become more bearish and more bearish. That's what it appears to be, or at least closer to the weekend, next week, it will become fully evident for being more bearish, and then next week afterwards, that will be a very bearish week. But it seems and it feels like we are basically one step away from sliding lower than the recent supports and resistances we've been testing. So maybe even finally seeing that 57 area as we've been predicting for the last couple of weeks. But yeah, we're moving there. That is the final direction of the movement. It's hard to see that through Palantir, I know. Don't get overexcited. For now, by the way, Palantir, if we objectively look at it, it kind of gave back everything. So they pushed you back, guys, to buy, and now they're selling. We'll push you maybe to buy again, and at some point going to dump you. That's going to be one of the greatest rug pulls of 2025, I guess. An actual rug pull. I can't believe Palantir will be a part of a rug pull of sorts, if you will. Nvidia is not all that surprising. I said it's going to retrace back a little bit higher, but then again, it's going to retrace back to the 118, 115, 110. We know that row of supports and resistances. In fact, that's all that bunch up of stuff you see right there marked here. There you go. There you go. 118. You see? If I'm just going to remove this trash, you see I'm marked already 118, 112, and 110. We did speak and say how this will move up, how we have this gap potentially to get closed, and we still might see this price action continue all the way through to close the gap, right, and only then break down. So chill out. This was actually predicted. Don't believe me? Watch last week's videos. Tesla is having really a bad time. Tesla is hurtling towards 359 with some slippage. It's probably going to get 355 in the upcoming sessions. Again, it's not going to happen overnight, but it's safely, surely moving slowly towards 359.76. The momentum, although there is some bullish momentum there for the really short time frame, I see right there in the 5 minutes, all the other time frame views really appear to be a lot more bearish. And if I would have to be the judge of the circumstance, I would probably say that it appears to be that the market is moving towards the bottom of this channel, as it's been retested before. We might have some slippage. Don't forget, the market might slip a little bit. Actually, given the handle of 350, I'm not 350 whatever, so I'm not going to be surprised if the actual bottom will end up being a 350. If momentum will be really negative, we might actually see 347 next week, 346. It might not last for too long. The market does tend to do these sort of things by sort of, let me show you. The market might easily do this, right? Kind of break here, correct back in, retrace back up, retrace sideways, and start breaking back in, giving you the very same sort of reconfirmation or retest of that level, potentially a retest, retest, done, right? So this process might get prolonged, and it might have a whole different scenario, right? It might play it out differently. It might play it out like this, like that, like this, like so. There are so many ways this can play out. Bottom line, end point, bottom line. Eventually, within the following months, I predict we might see something within the range of 328. Of course, when I say months, I mean months, okay? So, hold your horses. And that is the really more said scenario. The more positive scenario is actually one that will take you back right here to 383, potentially retest some sort of a wedge that is getting created here, and maybe then eventually start breaking, because this is so deep now, it's not going to be all that straightforward. It might again retest, and only then break down. Outcome over the longer period, bottom line, doesn't matter whether faster or slower, depending on the market conditions, it will get to 327. So understand, there are multiple scenarios here. Right now, I just drew a couple, right? A, B here, for example. In reality, you might end up with, I can draw here probably 5 different scenarios. I drew and spoke about the ones that make more sense based upon the momentum as it's being structured. Remember, the momentum right now, it's kind of hard to justify it going up and then only then down if all your momentum is bearish. You know what I mean? It's kind of problematic because the momentum is bearish. Let's be freaking frank about this, right? Look at the weekly. It's penetrated the 50, moving down. Divergence is clear. I would say, boys and girls, this is bearish. If you cannot see it, you better go to the eye doctor. Okay? Cool. Let me just remove some of the junk because I really got carried away here. Well, actually, I might want to keep this for later. Okay, I might just want to remove some of that other junk then, I guess. This here. Just not to interfere with the other stuff. Yeah. Let's save this so you guys can see what I was drawing and saying. Yeah. Now, this is bearish. This feels a lot more rapid. Remember, I draw these things out for you guys to be able to see the structure, but this may actually play out a lot more rapidly than you expect. Like, this is A, and in fact, where A resides should be B, but just kind of longer, right? So, by the way, which gives it a far lower low at 316, just saying. But that will still be slippage, and it will still be 328, 326. But again, weeks to months, to be clear. Weeks to months, okay? That's Tesla for ya. What else? Yeah, that's kind of it. BlackBerry, I don't know if I'm gonna do tickers. I am really done. I mean, that's why I'm doing the tickers right now. I am so freaking tired. Market is closed already, but look. Well, I know we need to look at earnings. What do we have next week? What do we have next week? SoFi, first of all. SoFi, since I'm already kind of there. Well, we need to check out what we have next week. SoFi is a lot more bearish than bullish. SoFi is very bearish. I know here it looks bullish, but here it's appearing to get stuck at 50-ish area. That's not good for you. And everything below that, as you can see, already is bearish, right? So looking downwards, bearish dominant, bearish. Looking downwards, bearish, oversold. So bad, 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 bad. And again, 4 hours, the only one that is supposedly positive, but again, below the 50, so not really positive. Again, bearish with the current relapse for some relaxation time, right? Because it went a big rally down. Now it needs to relax and then correct a little bit, blah, blah, blah. Stay oversold. Probably because market doesn't care, because market is still going down. Down, 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 down. Market more down. That's weekly. Well, how does the monkey look like? It haven't even started yet. This is haven't even started yet. When it's gonna start and hit the fan, it's gonna be unpleasant. Why we say 50? Because 50 is ground zero, boys and girls. 50 is where things become from bullish to bearish. Below 50 bearish, above 50 bullish. Okay, cool. Above 50 slightly bullish, below 50 slightly bearish. Further it gets from the 50, the more whatever it is. Cool, more bullish, more bearish. But it has limits. That's why it prints so stupidly. Right? That's SoFi. You got SoFi. That's it. We're gonna do SoFi. Come on. We've done Palantir and Plug. There's not much to say. I'm buying Plug. You do you. We said we're gonna drop back to 180 area, 188. That is where our actual support is. 180 is slippage. 175 is possible. So anything right in that vicinity is a buy for me. All of that. That is me though. You do you. You see how it does. You see how it does. So we just accumulating. When I say we, I mean me. And also I know some community members, but to each their own, Why? Because that can bring nice yield, nice yield, very nice, very, very, very nice yield. If you are patient, you can see it, very nice yield, right? But don't get too soon, take time. If we get a real big rally, we get a lot more than that. Yes, we can do a lot better. Yes, we can see here, it is not true. That's it, sure. But it has very nice potential of bringing us a very nice multiple. That's it. BlackBerry, again, I know you're in the Discord. Join us. We'll see. We might hang out on this weekend a little bit and whatnot. I'm just really tired. We had a really, 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 tiring week. Lots of stuff going on. It really got me busy. Lots of students. Which brings me back. I remind you, boys and girls, soon it's going to get locked. 2 final spots for the one-on-one Technical Analysis Academy. There will be potentially new progression with the Academy stuff. There will be potentially a group academy. Eventually, there is some ideas here that I'm working on with my new admin moderator. You know her as Badwars Gang. Some of you know her by different names, but that's not the point here. The point being is that there are new progression things, and so of course there will be still one-on-one academy, but it will be a lot more rare, more expensive, unless you are a founding member. First of all, founding members will still retain the old prices. So yeah, that is it. And quickly, blah, 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 igloos. Before we go away, it's not going to look like that. The tiers already look differently. You have only one tier that goes for $20 and with a discount of 10% annually. It is what it is. We'll bring up this page up to speed so you guys can see the way it should look like. Then we'll have the Academy tier open up later. I might be planning at some point to open the tier early for early birds who want to join in and solidify a spot. It doesn't mean that we're going to start right away as the tier will open up and people will end up subscribing. They might, so the earlier birds might end up waiting for a little while, but that way at least they will secure a spot. But yeah, it's not going to be too early. And again, that's going to be for those who want to secure a spot. We'll see. This is all still in its diaper form, so plenty of time. Chill out. Don't rush it. But remember, there is a benefit to one-on-one academy. It's a lot better than just group academy. Some people shy to speak in crowd. I'm gonna be plowing and running through the material, and we're gonna be showing off how certain things look like, testing things, doing things. So yeah, it's gonna be somewhat, maybe those of you who are Tom Nash's students in his academy, it might be looking a little bit similar more to that, but other that is going to be in the form of dealing with technicals, right, with technical analysis. But again, I do believe that the one-on-one is far better. That's it, boys and girls. And don't think that the academy will be cheap. Again, group or not group, it doesn't matter. It's ain't gonna be cheap. The one-on-one, at the end of the day, if you ask me, is better and worth it more than the group thing that I will have later down the line. That's it, boys and girls. Love you all. You all have a marvelous weekend. Go rest. I hate to say that this week, all in all, was pretty uneventful. If we really objectively look at this week from, a zoom out standpoint, right? It wasn't really all that eventful in the context of things, right? If you really compare to where we were, what we have done, what changed, nothing. This is a nothing burger, and I would start thinking, what would you feel or see, or how things would look like for you if the market does break down like I'm saying. I would just point out, remember, Warren Buffett would have not sold the market if he would have thought that the market is just going to drop like $1,000, right? So I would think twice before you just let things be. I'm not showing the screen. I'm a moron. All right. It doesn't matter. But sure, who cares? I wasn't showing there anything important. Anyways, so yeah, think about the fact that Warren Buffett sold out of the market, and he's obviously not going to be selling for to catch a difference of $1,000 in the overall market. And when we're looking at the S&P, the Nasdaq, a couple of thousand, he's looking probably at something more substantial, and that's why he sold everything he owns. And he was preparing for this far in advance than most people are. So, he doesn't want to wait for the last second. He understands the implications. And the fact of the matter, the market was able to push higher than they did should not signal to you that you should be buying with both hands. But because this is not financial advice, what you should do is what you think is best for your portfolio, and screw everybody, all financial advisors, all talking heads in the media, schmedia, YouTube, schmootube. You do what you think is best for you. Boys and girls, love you much. Hope to see you on the Discord. We might have a hangout on this weekend. I'm not sure. I don't think it's going to be Saturday. It's probably going to be a Sunday hangout. Probably evening time-ish, maybe before Tom's Zoom, maybe later. We'll see how things work out. Maybe gonna be like an early afternoon sort of thing. We'll see. But definitely be attentive to the Discord, because that's where we're gonna do it, and this is where I'm going to post about the schedule and that sort of stuff. Boys and girls, like I said, for the last time, love you all. Wish you a wonderful, good, relaxing weekend, and to see you on the Discord. Peace out.